Hello, thank you for joining our webinar. My name is Christina Honeycutt, CEO, advisor, and bookkeeper of Making Sense Solutions. We are located in beautiful Lake Placid, Florida, but service clients all over the United States. Our mission is to empower individuals and business owners with the knowledge to grow their wealth. Our services include business advisory, bookkeeping, tax filing, and debt elimination solutions. I have a lot of information to go over, so I'll get right into it. Now, disclaimer, this presentation is for educational purposes only and is not meant as accounting, legal, or tax advice. It does not take into account your particular circumstances, objectives, financial situation, or needs. Before acting on any information in this presentation, you will need to reach out to a professional advisor. Now, I know a lot of people are attending this webinar from all over the United States, so just to let you know, this information is meant to be general education. And if you need to know more about your specific scenario, feel free to reach out. We do offer 30-minute free consultations. You may call us at 863-800-0756. Now, all this information is geared towards people thinking of starting a new business or have been in business for a couple of years, wanting to make sure they're compliant and understand what's needed as a business owner. So let's get started. First, we're going to talk about entity types. When a person decides to start a business and they receive income from products or services, they are considered a sole proprietor. You'll need to check with your city, county, and state to see if a license is required for you to sell your products or services, even if it's home-based. Now, most businesses require some sort of liability insurance and or workers' comp, depending on your state requirements. Now, as a business owner or a sole proprietor, you don't have any legal protection between you and your business. And being a sole proprietor does not affect your tax return other than adding a Schedule C to your 1040. And the Schedule C will include your business income and expenses. However, if you decide to use a business name, you'll need to register with the state for a DBA. A DBA stands for Doing Business As. This still provides no legal protection whatsoever, and it does not affect your tax return. It is only allowing you to work under a business name. Now, when you're ready to add protection between yourself and your business, you will register your business as an LLC, which is a limited liability company. And as long as you keep your business and your personal finances separate, you will have legal protection for your personal assets. However, if you commingle funds, that protection is void. Now, registering your business as an LLC does not affect your taxes. It is still considered a pass-through entity, which means a Schedule C will be added to your 1040. Now, the next election you can select is an S Corp. Now, a lot of people think if they automatically register as an S Corp, they'll receive huge tax benefits. And this is false. You need to be in a certain tax bracket or it will cost you thousands of dollars. Generally, I like my clients to start thinking about the election around $40,000 to $50,000 of net profit. Now, this is not the money your business makes. This is the profit that is left over after all expenses. However, there are other variables you need to take into consideration, such as your tax return filing status, what else will be going on in your business before the year end, and also what time of the year you are looking to incorporate, as sometimes the IRS will deny late in the year incorporating. Now, always seek legal advice from a professional before incorporating, because like I said, incorporating at the wrong time will cost you thousands of dollars. There are added expenses in incorporating. You'll need to file articles of incorporation. You may need to have corporate bylaws updated annually depending upon your state requirements. You'll need to create an accountable plan with your attorney. You'll have a personal and a business tax return. And as the business owner, you will need to be put on payroll and be paid a reasonable salary for your industry. So incorporating is an important decision and it needs to be done at the right time. Next, we're going to discuss how to pay yourself as a business owner. And as a sole proprietor LLC, your business cash flow passes from your business to you. You do not put yourself on payroll. Owners are only on payroll if they are incorporated. You can pay yourself any amount you determine through transfers or checks. But just remember, if you are an LLC, sole proprietor, to keep your business strictly for business expenses and or draws transfers. Now for an S corporation entity, the owners should be put on payroll. You are considered an employee of your business. You'll need to pay yourself a reasonable salary for your industry, and you may also take distributions from the business. Depending on your circumstances, I usually recommend a 50-50 or a 60-40 ratio of payroll versus distribution. Now, this will depend on your personal tax bracket. You should work with your accountant to determine what is best in your situation. So next, hiring employees versus contractors. Now, there's a lot of misinformation with this. Many states are now requiring you as a business owner to prove that your worker is not an employee. It's very important that you classify your workers correctly. Now, when you hire an employee, when you hire a contractor, you will need them to fill out a W-9 before they provide any services. They will send you a bill after the services are completed. They will work their own hours. They will provide their own tools to complete the job. They are professionals in what they do, and they contract with other companies. And at the end of the year, you will provide them a 1099 if applicable. Next, when you hire an employee, they will fill out a W-4. And some states require notification of hiring to the state. The business will set the employee's hours. They will provide the employee with tools to do their job, and they will provide the employee with training if needed. And at the end of the year, they will receive a W-2. Now let's talk taxes. There's a lot of different taxes involved with running a small business. First is payroll taxes. There is federal, Social Security, Medicare, and unemployment payable to the IRS. The employer is responsible for matching the Social Security and Medicare that the employee owes. Right now, it's about 8%. The employee will have 8% deducted from their wages, and the employer will match that amount to submit to the IRS. There also may be state income and unemployment taxes. You'll need to check with your state for requirements. Now, let's discuss sales taxes. This is a very complicated subject, and I'll be doing a more lengthy webinar about this in the future. Sales taxes are fees that will be paid to the state when you sell a product or service. Now, every state is different, and the first thing you should do as a new business is check with the Department of Revenue anywhere that you have physical nexus. Don't assume because one state has a certain rule that another state also has that rule. Sales tax remittance depends on how a customer is invoiced, what type of industry, physical, and economic nexus. Now, sales tax changes depending on how you invoice. For example, as a bookkeeper, if I bill a client separately for their QuickBooks subscription, that may be taxed depending on the state. But if I include it in the monthly rate and don't separate it on the invoice, they will not be charged sales tax. Now, two of the most complicated tax industries are construction and e-commerce. For construction, depending on the state, the construction company may pay sales tax when they purchase the products, or they may collect from the end user, who may be the general contractor or homeowner. Now, also know that the sales tax varies by state and type of construction, such as new construction, remodel, or service repairs. Next, an even more complicated sales tax situation is the e-commerce industry. The end user will be charged sales tax, but only if they have reached sales tax threshold in the state the product was shipped to. However, some states are origin-based sales tax, which means you'll need to collect sales tax because your business is registered in that state. Now, every state has thresholds they should meet, and every state is different. And this threshold is called nexus. There is physical and economic nexus. Physical nexus includes, but not limited to, where the business is registered, where the owners and employees live, where inventory is stored, and a whole lot more. Now, economic nexus is when you reach a certain dollar amount or transaction level for a state. Now, all selling platforms handle it differently. Some selling platforms are a marketplace facilitator. This means the sales tax is a little bit easier, but you still need to know the rules. Even though the marketplace facilitator may collect and remit the taxes for you, you may also be required to submit a return if you have physical nexus. You'll need to check the laws for each state, and I recommend Avalara and TaxJar for more information. Now, let's look at your federal and state taxes. As a sole proprietor LLC, when you reach $1,000 owed in federal taxes, you'll need to submit an estimated tax return and payment quarterly. This form is the 1040 ES. Now, this may or may not happen in your first year of business. A guide to remember is to set aside 25% for your federal taxes and 5% for your state taxes if you're in a state that requires income tax. Now, 25% is for the net profit of your business. And make sure when you are determining your net profits, if you have anything in Ask the Accountant, always ask the accountant before you file your quarterly payments. Now, for your annual federal taxes, as a sole proprietor LLC, it is considered a pass-through entity, which means your business is part of your tax return. Like I said before, you'll file a Schedule C with your 1040. As an S corporation, if you owe more than $500 in taxes, you are required to file an 1120W quarterly. S corporations are taxed 21% on their taxable income. Make sure, and just like I said before, make sure anything in Ask the Accountant that you ask your accountant before filing this return, because there are penalties for over and underpayment, even though they are considered estimates. They only give you a certain amount of leeway. Now, when you file your federal taxes as an S Corp, you will file two tax returns, one for personal and one for business. And the form for business is 1120S. Now let's discuss hiring an accountant or a bookkeeper. Sometimes people think that accountants are bookkeepers, but there's a lot of differences. Bookkeepers provide regular daily and/or monthly tasks for keeping the finances up to date in the business. They can help you with invoicing, paying bills, handling payroll, managing inventory, and a lot more. And they can provide internal financial reports that can help you make decisions in your business. Now, there are a lot of different types of accountants. For example, there are CPAs, which are certified public accountants. There are tax accountants, tax planners, and tax resolution specialists. Each is a different service, and not every accountant offers that service. A tax preparer does not need to be an accountant. You do not need any formal education to file taxes. And accountants do not do bookkeeping. They either have people in-house or they contract with bookkeepers. When you contact an accountant for your end of year tax filing, they will pay a bookkeeper to clean up your books and then charge you accounting rates for the bookkeeping cleanup. You're better off to find a professional bookkeeper who can clean up your books and then submit them to your accountant. This is what we do here at Making Sense Solutions. We do not charge accounting rates for bookkeeping cleanup, since myself as the CEO is the bookkeeper, and I have on staff accountants to file your tax returns. Now, what to look for when hiring a bookkeeper? Are they familiar with or willing to learn the software your business is using, such as QuickBooks? Are they available as needed as a virtual contractor or an in-house employee? Are they experienced in your industry? Now, this is the most important one because every industry is different and the books should be kept a certain way depending upon that industry. Just for example, businesses who sell online, when they receive a deposit, and let's say Amazon deposits into your bank account twice a month. That deposit includes many transactions. And that is the net pay. That's not your gross, which means if you have an inexperienced bookkeeper that is not familiar with that industry, if they book that net dollar amount as sales, they are understating your revenue. What they need to do is go into Amazon and pull the reports and break down that deposit for everything that has happened with those transactions. Next, can the bookkeeper provide all the services needed? Some bookkeepers don't do payroll. Some of them can provide sales tax filing. So just make sure that you find a bookkeeper that can do everything for you so that you have the go-to person for you. Next is availability. As a business owner, you're very busy and your time is the most expensive time in the business. Is the bookkeeper available when needed? And do they respond timely? Generally, they should respond to emails within 24 to 48 hours and should be available by phone the same day within working hours. Another thing to look at is how do they charge? Is it a flat rate that can be expected, or is it an hourly rate where everything's up in the air? We like to charge a flat rate because we don't like to surprise our clients. We like the clients to know where they stand with us. Next, when hiring an accountant, it's basically the same things as hiring a bookkeeper. Make sure they're familiar with or willing to learn the software. They have experience in your industry. They provide all the same services you need, and they are available and respond with a timely manner. But I like to add in compatibility. It's good to work with someone who you feel comfortable with. They should be a partner in helping you to succeed. They should be able to explain tax laws and numbers at a level that you can understand. Now, I'd like to thank everyone who has joined this webinar, and I hope that this has really helped you understand what is your responsibility as a business owner. And if you have any questions, feel free to reach out to me anytime for a free 30-minute consultation. And thank you, and I hope you have a great week.